Hi, this is Dustin with Dustin's Dollars. Today I'm going to be talking about Tellurian, specifically about the acquisition of gas that they did today um, in the Haynesville for some gas assets there, and what I think this means for Driftwood, and what the impact of this was. Wow, I already have someone in the chat. Wakaza, hello. Nice to see you there. Before I begin, let me remind you that I am not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I currently hold a long position in Tellurian, so this video should be for entertainment purposes only. Because I could be wrong about everything I say in this video, you need to do your own research before making any investment decisions. So, as I said, I'm going to be talking about this today and what happened, right? Tellurian acquired assets. They're buying assets. Acquire is a bit of a weird word to use, but they're buying, it kind of makes sense here because they're effectively buying all the assets of the company, just not the company itself. Hi, Transient Stacker. Got some folks in the chat. This is great. But so they are buying the land. They're buying the actual the wells, or the wells, producing wells that are already there. They're buying their they're going to continue on with the drilling there with the rig that they already have, and they're paying $125 million for this. And then there's also this contingent payment of $7.5 million. If gas prices stay high, effectively they kind of sort of view it as they sold a bit of a call option, or like a call spread to these folks, so that if gas prices stay high, they'll get even more money, which Tellurian should be able to afford because gas prices will be high. But in return, what they are buying is they're buying 45 million cubic feet per day of current production, and they're getting 5,000 acres in the Haynesville. Which I think of the present corporate presentation. I'm going to flip back and forth between these. This was a new presentation put out today that actually had some more information on this. That they believe this is going to be about 300 BCF total in terms of gas resources. Although right now only 108 BCF are proved reserves. So I think that's sort of the main points here, right? And they do have a 1-rig drilling program that they intend to continue. And they had this this calculation here, this PV10, which is the net present value of the proved reserves of the gas, discounted at a 10% annual rate. And so this was a nice statement here to say that, well, the PV10 value of these reserves is actually $180 million. So they're paying 125, maybe an additional 7.5 million, but they're getting $180 million in net present value worth of gas. So it seems like a good deal when viewed from that perspective. And I'm going to flip over here, and they talk a bit about, or they have some additional details in terms of what this is going to look like for Tellurian's production overall over the next couple of years. And I think the big things that I'm looking at here are these two graphs at the bottom here. That as I said, the total resources, this adds about 300 BCF to their expected reserves, and that their production by the end of 2023, they think they're going to get to 350 million cubic feet equivalents per day. And so from that, I did a little bit of math to sort of see what is the impact on phase 1. And the way that I'm looking at the numbers here, it looks to me, right, if they have this 300 BCF in reserves that they got from this acquisition, that they're probably going to ramp up production to roughly 24 BCF per year. And in the time while they are ramping up production and producing gas between now and 2026, when Driftwood LNG phase 1 will hopefully start utilizing that gas and exporting, I think they're going to use up roughly 60 of that 300 BCF. And so that's going to leave 240 BCF in the process, and that you will align with the 24 BCF per year, so that they can produce that. They can use that feed gas for 10 years in Driftwood LNG phase 1, and have effectively hedged about one half of an MTPA, right, a million ton per year, which is about 4.5% of the total production of Driftwood LNG phase 1. And they paid, again, $125 million today, or really on August 1st, I think is the date of the transaction. And in return for that, they're effectively going to enable themselves to hedge about 4.5% of the gas that they need for Driftwood LNG Phase 1. And I think that's kind of the punchline. They are also going to get themselves about, I think they have the projection here, about $100 million per year in Ebitda in 2023. I'm trying to find it. I don't see it here. It's somewhere. But it's around about that amount. And here we go. Projected EBITDA 2023 of 90 to 120 million. And I think elsewhere in here is that they expect to spend about 30 million in drilling on these continued in 2023. So really that EBITDA, you might want to subtract that off and say maybe it's more like, let's just call it roughly 60 to 90 million of actual cash flow that they would have to use for other purposes, in the gas that they're selling as they are ramping up production on this acreage. And so that's actually going to help them have some additional cash to put towards Driftwood. So I think that's the other benefit that they're going to get here. I think there's a couple less obvious impacts of doing this. One is, so I had a video probably 2 months ago or so, I think in May, about the downside protection of Tellurian as a company, right? Investing in Tellurian, because you can also value them as a gas producer. I know that I suspect that most folks who are invested in Tellurian, probably all of them, but maybe not, maybe not all, I don't know, are invested because of Driftwood and of the potential to export LNG, right? But they are producing gas. This is actually increasing their gas production, and you can value them as a gas producer if you want to do that. And this actually strengthens that downside protection because they're now going to be producing more gas after acquiring these assets. And so I think that's actually one nice thing. It's sort of a nice consolation prize. Maybe that's not the right term, but it gives you a bit more confidence. I think another thing is, this was, if you listen to Sharif Suki's video on Tuesday, he said, there's some issues with the facility at Freeport, and Tellurian, so they're no longer able to export LNG at the moment. And Tellurian, if they were both, because they're intend to be vertically integrated and will be actually producing some gas, that they will kind of have some optionality. And it's similar to the downside protection, but this is also, even for the future, even if they do build the facility, Driftwood, and they are happy, sort of the expected path is that they are going to be liquefying the gas and exporting it. But if something happens and they are unable to do that, they are at least still producing gas, and that still gives them something to provide value as a company. And so that's sort of, even for the future, some optionality that you could view as some downside protection. And I think one of the other things here, and this is maybe obvious, maybe not, is every bit of additional upstream gas that they vertically integrate, this is reducing the risk and making it easier for banks to finance, right? Because with the business model of Tellurian, if they were purchasing all of their gas, right? And I've talked about this in the past. They're exposed to the risk on what is the Henry Hub price going to be in terms of the gas that they're producing, and they have the risk of what are they going to be able to sell it at in terms of JKM and TTF. And the more and more that they are actually hedging that upstream gas costs because they are vertically integrated, that makes it, I think, easier and easier for banks to be confident that they're going to actually make a profit and be able to pay back the banks. So overall, I think it's a step in the right direction. The one thing just to recognize is this was a very, very small amount, right? Like I said, this is about 4.5% per my calculations of actually hedging the gas for Driftwood LNG Phase 1 over a 10-year period. And so this was not that big. We'd really want to see an acquisition that's like 15 times this large in order to sort of lock up the rest of the feed gas that they'll need for Driftwood LNG Phase 1. So, hopefully this is a precursor of more bigger things to come. But I think it's a step in the right direction. So, I see there was some stuff on the chat. Let me, that was that was the thing. All I had prepared today in terms of what I wanted to talk about for Tellurian. And so I am going to go through the chat now, and we'll just talk about whatever we got going on here. So anybody who is was watching for the main topic, this is the end of that, and I'm going to just move on to the live chat. Small plug for anybody who does watch this after the fact. I do these live usually in the evenings in the Eastern US time, 9, 10, 11 p.m., somewhere in that vicinity. Try to hit Sunday through Thursday evenings. And I love having folks on the chat. So, all right. Wakaza says, despite today's CPI report and inflation numbers, that is good news. This company will proceed of gaining assets to meet production goals. Yeah, absolutely. I think this is good news. They have always talked about having as far as I've been following the company for, which has been years now. They always wanted to be vertically integrated, and that was the kind of the end goal, or at least have a large physical hedge, even if they weren't 100% vertically integrated and producing their own gas. But they always wanted a lot of that, just because that gives them full control and lets them produce and export the gas for the lowest possible cost. And as I said, I think this is a huge step it's a small step in the right direction. That's probably a good way to frame it, because it was nice. It just is not actually that meaningful in terms of Driftwood, if the goal is to actually hedge all of your gas and actually be producing all of the feed gas. Now, maybe their end goal is actually to hedge 50% or 60%, so that they still have, so they don't have to do everything themselves, but that they, if Henry Hub prices actually do go very high, they have at least enough of their own physical hedging. They're producing enough of their own gas so that they're not exposed to all of that additional cost from purchasing the gas. So that's kind of what I think. I'd be curious to know what you think. And Wakaza also says, side note, Hawaii just dropped in terms of gas prices from $4.98 to now $4.78. We are similar here where I live in I guess I'll say the state. I suppose that's probably not too big a deal. In Pennsylvania, I think we are pretty similar. We were right around that $5 mark, and now it's dropped down about 20 cents or so. So that's pretty cool to see things kind of coming down, and I think that's I think that is indicative of what we saw in overall oil price. I think oil prices have dropped a bit in the past couple weeks, and I think that's really the come on, Yahoo Finance, super slow. I think that's just reflecting the drop in oil prices, right? If we go back, here's a 6-month graph. You can see the oil prices are coming down, and now I think it is starting to be reflected. Here's the month of June, right? The past month, a little more than a month, right? Since June 8th, oil prices have come down. They were $1, $1.20 a barrel, and now they're down in the 90s. And so I think that's actually why we're seeing some of the gasoline prices go down. So yeah. Anything else? Any other questions, comments on the chat? I'm happy to stick around for a little bit if y'all got stuff on your mind. Be curious to talk if you have anything for Tellurian, although I know y'all are interested in more than just that. I'll give it just a moment. What is the debt versus cash flow on Tell? So, I don't know. Maybe if you haven't watched my too much of the prior videos or aren't too dialed into the company, right? They do have a little bit of debt now, but the company is driving towards building a liquefied natural gas export facility, and they're going to have to take on a good chunk of debt from that and build the facility for a couple of years, but they already have purchase agreements to be able to sell it. And so right now, and I don't know, maybe you're asking for them as a gas producer. So I mean, right now their debt is, I want to say, on the order of $500 million or so. I think from their most recent financing, and I guess I could pull up the 10Q, although that's not going to be recent enough because they've had some recent announcements where they actually got some convertible notes, and then also they have their borrowing facility where they can sort of issue bonds at the market. I think they have up to $200 million authorized for that. But and this is the big question, right? For Tellurian, the big question is how exactly are they getting the funding to build the facility, and that's the big question mark, right? That's why it's at $3 a share, in my opinion, rather than $10+ a share right now, because there's just so much uncertainty around how they're getting the financing. But to answer the other side of your question, right now their cash flow, they actually did it was kind of a weird, but they did do a recent press release that said what they expect their EBITDA to be. I think it was around $300 to $400 million in 2022, 2023, or maybe just the forward 12 months. Where was that at? It wasn't this far back. Maybe I missed it. Oh, you know what? I guess it was just a filing. They didn't make an actual press release for it. But that's their current cash flow, but that's based off of them producing gas. And again, that's not like really the intended long-term business. The intended long-term business is to export liquefied natural gas, and they have yet to build the facility. Yeah, so this was the 8K that they filed a couple of days ago, where it expects that the EBITDA for the full year 2023 will be approximately $400 million from their natural gas production activities. But again, this is, it's not set in stone, right? This is just their prediction, but that hopefully it gives you some indication, right? This is their, again, just based off natural gas production. Once they're doing LNG production, they're expecting billions of dollars per year in profit. All right, transient stacker. Why would the company sell a profitable piece of gas producing land? I assume you're talking about the land that they're purchasing, and it's a good question. I think I have not. This just happened today, and I have my day job to do, so I've only gotten to really start reading into things a little bit this evening. I don't know anything about this company that they purchased from. This EnSight Energy Partners. I have not had the time to do any research here, so it's a good question. I don't know what all they are involved in. I don't know how big the company is, right? Like there's a number of reasons why somebody might sell, but I do not have any insight, so I do not know. This website does not have anything. This is literally all it is. EnSight Energy Partners. Huh. What's this? EnSight Energy Partners. Sorry, I'd be curious if anybody else who's on. I suppose must just be us three here. Just looking to see what I could find out about them. Yeah, I don't know. I'm guessing they're a private company since there's not a whole lot of information. So it's hard to say, right? If it's privately owned company, you never know, how much of that is owned by one family or one person, and they might sell for any number of reasons. Honestly, they might just sell because maybe they have a view. Maybe they think, you're looking at let's see, natural gas. I don't know what's a good ticker just for general natural gas. I guess I could go to the CME group, right? But I don't have to actually pull up the chart for you to say, it's possible that this company sold because they think that Henry Hub prices are, sort of at a peak or near a peak, and that if they waited another 6 months, maybe the value of their assets might be down by 30 or 40%, right? I think that's not an unreasonable view for somebody to have if they think we're going to hit a really hard recession and things are going to, demand is going to be destroyed in a number of different ways. It's possible. again, I'm just trying to come up with an answer. I'd be curious to know, what you think that would be a reason. You don't want, again, like I say, it might be owned by one person or one family, and maybe they want to just be out of the business, right? Maybe they're getting some, you know, maybe that's just the stage that they're at in their life. Maybe they want to start a different business. Who knows? Like, there's a number of different reasons why you might want to cash out of one business and go do something else, even if the business itself is, plenty healthy and has a good future. So hopefully that, gives you something to think about. I don't have a definitive answer or even a confidence in my answer. They're just kind of throwing things out as possible reasons. Yeah, there does not seem to be anything here. There's also this EnSight, I think it's Haynesville Partners. I can spell. EnSight Energy Partners. I'm just looking to see if we can learn anything about the company. There's probably a better way to do this. It's an oil and gas company based in Shreveport, Louisiana. Seeks to create value through engaging in production assets and low to moderate risk drilling projects, operational enhancement, geological exploitation, and active property and portfolio management. And I assume that's the website that I was already looking at that it redirects me to. Come on. Yeah, same website, so nothing new. So this says 2 to 10 employees. It's privately held. I mean, look, it was just founded in 2015. They're able to sell the business now for $125 million with maybe an additional 70.5. That would be my answer for you, right? Why do they want to sell? They're getting a lot of money for it, and now they get to, retired or whatever it is that they're doing. That would be my best speculation, right? On a company that's 2 to 10 employees, it's almost certainly owned by 1 or 2 people. Yeah. All right. Well, Kaza says the good part is that LNGs are in high demand now. Yeah, absolutely, right. And that's the, I had a whole video or two talking about the global market for LNG. Tellurian has a nice graphic here showing, sort of the huge incremental LNG demand that we need, or that the world needs, in order to replace the gas that was coming from Russia into Europe through pipelines and is not through pipelines, right? And that was the crux of one of my prior videos about I can't recall if I put it in the same video of just the macro overall global picture, or if that for anyone specifically about the Russian LNG, but I think it's a ton. It's like the equivalent of around 100 million tons per year of LNG that are needed to replace the gas that previously was coming from Russia into Europe. And this shows you what the capacity additions are for facilities already under construction and or have reached FID, I guess it is. As long as Tell grows as well as controlling debt, they'll do fine. Yeah, well, so the big question for them is how they're going to get the money, right? Because that's or are they going to get the money? Like, how they're going to get it is they're going around to banks and trying to get this wrapped up. But they've been doing this process. They said they've been doing this process since, middle of 2021, and it hasn't materialized yet. And so there's a big question mark, right? There's a lot of uncertainty hanging over the company and the stock, and that's reflected in the current price. But yeah, I think I obviously I'm very optimistic about the future of the company. I have a long position, as I already disclosed. Transient Stacker says, it seems to me that when Freeport comes back online, U.S. natural gas prices will go back up. Probably. Yeah, I don't know how all of that is structured, but I mean, I think fundamentally that has to be true, right? That when Freeport comes back online, they're going to be purchasing that gas again. like I say, I have not done enough research into Freeport to know how all of that is structured, but I would guess that that's true, right? Fundamentally, they're not using the gas right now, and they're going to be as soon as it comes back online. So, I mean, it's a great point. I agree. Um, I agree. So, yeah. I don't think there's much else we're gonna find about this EnSight Partners. Seems like a pretty small, privately held company. Probably didn't have any good reason to really put much information out there. Yeah, this is all just like boilerplate stuff, legal filings and such. Well, Kaza says, thanks, Dustin, and thanks for the notify thing on YouTube too. Mahalo. Yeah, I I have not actually done anything yet. So if you're getting notifications and you weren't before, that is not me. You should thank YouTube. But yeah, no. Thanks for tuning in today. I'm trying. Hopefully, you may care. Hopefully, soon I might be able to set aside some scheduled times, at least 1 or 2 days a week, to do streams that could be predictable. I'm still trying to work that out. It's hard. I've got a family, so it's hard to work that stuff out. But I enjoy doing this. So, all right, thank you for tuning in. If there's nothing else, I am gonna hop off and probably go to bed. It's almost midnight. So, all right, sounds good. Thank you for watching. I appreciate it, and have a good one.